The Easwar Committee, set up to simplify the Income Tax Act, has good news for both builders and buyers. The recommendations could reduce your tax burden on property transactions. So, what are these tax-friendly recommendations? My colleague Disha Shah sent us his report.
Ahead of the budget, Easwar Committee has submitted its recommendations to the government to make tax laws more simpler. Tax experts believe that some of the recommendations that the committee had submitted to the government early this week could also have a huge impact on the real estate market. To highlight three key recommendations that are part of the draft, firstly, date of sale is irrelevant now. The committee recommends that capital gains could be computed only on the basis of the agreement registration date. And wherever needed, ready reckoner rates or circle rates that are in force on the date of registration only needs to be taken into account. Secondly, in cases where sale price is lower than the ready reckoner rates or the circle rate, only in during such transactions, seller will need to pay tax on the capital gains. As we all know that till date, buyer and seller, both the parties have been paying taxes on the capital gains. So this won't be the case anymore because the committee clearly recommends that this leads to double taxation of the same income. So this clause needs to be floated and deleted, and buyer need not have to pay taxes on the capital gains. Lastly, the committee has recommended that tax deducted at source, or even called as TDS rates, for individuals could be reduced from 10% to 5%. And lastly, tax experts believe that if these recommendations are implemented and if government takes care of all these recommendations, there could be a huge impact on the property market transactions. And some of these recommendations are likely to be a part of the union budget, which will be presented on 29th of February this year.
Alright, to get us more perspective on this, we're joined in by Samir Kanabar, Partner, Tax and Regulatory Service, Ernst Young LLP. Thank you so much for joining us here on Magicbricks Now. Samir, first question to you, what are the big changes recommended that will impact property market transactions?
From a real estate perspective, there are two important changes which have been recommended. So, the income tax law provides that the seller has to consider the sale value as per the agreement or the value determined as per ready reckoner or for stamp duty valuation purpose, whichever is higher. So, assuming that if the value as per agreement is less than the stamp duty value, then stamp duty value being the higher will be considered for computing the capital gains. So, committee has recommended that for computation of capital gains also we should stick to the same norms on the basis of which stamp duty has been paid, dehours of the date of sale. The second one is also a very welcome recommendation. If the seller has sold the property, immovable property, at a value which is less than the ready reckoner value, and that is what is mentioned in the agreement, then on the opposite side, the buyer was also required to pay tax on the differential value. Under those rulings, the courts have held that the buyer should not be made to pay the tax if seller has already paid the tax.
All right, my colleague Disha was just mentioning that the committee has recommended that TDS or tax deducted at source rates for individuals be reduced to 5% from 10%. So how is this going to benefit a buyer or a seller who is looking to sell or buy a property?
So what government has recommended is a reduction in rate from 10% to 5% is more likely to benefit the developers or the contractors or the builders. How it will benefit? Because if a higher tax is being deducted at 10% and your actual tax liability is much lower than the what tax has been deducted, then obviously one had to file first return. After filing return, one had to get a refund, which used to take sort of maybe a couple of years from the date when tax gets deducted. So it was a long drawn procedure, and if assessment happens, then it takes further time. So to simplify this, government has suggested that why not reduce the withholding rate from 10% to 5%.
All right, lastly, what are the chances that the government will act on these recommendations? Can we expect some sort of announcement in the budget?
I personally believe that this committee has done really a good job. I also believe that it meets the expectations of the government, and hence now it is for government to sort of now walk the talk. And I believe that government will certainly, even if not all the recommendations come in, because there are various recommendations, at least some of them should come in this budget.
All right, Samir, thank you so much for joining us here on Magic Bricks Now.